So we want to bring back in Brad McMillan of Commonwealth Financial. Brad, let's just start with what Jared was talking about with the strong U.S. dollar. Now, while Powell was speaking, we did see the dollar spike higher here, still holding on to gains today. But the strong U.S. dollar, just what is your assessment for how big of a challenge this poses to U.S. equities in the second half of the year and then looking ahead to 2023?
Yeah, I think when you look at this, I mean, the fact of the matter is the reason the dollar is stronger compared to international currencies is simply we've done more to get inflation under control. It's not showing up yet, but from a policy perspective, we're on top of things. I think that was an absolutely correct statement. So while at the same time, we're getting a challenge from the U.S. dollar, for example, sales abroad in foreign currencies are going to scale back into the U.S. at a reduced value. Nonetheless, we also get some advantages on input costs, especially for raw materials. And because we are managing inflation better, I think net, it's going to be pretty much neutral. And most of the arguments you get that it's going to be a headwind are based on those earnings effects. But I think they're going to be offset by some of the other positives that we're seeing.
And as you address this sort of simultaneous global tightening that you're seeing with other central bankers, are there any sort of outliers that you think could put additional pressure on the U.S. economy more so than they already are?
I think the big worry out there is energy prices. I mean, what we've seen in the improvement in the headline inflation index was largely due to energy and gas prices. But then today, we didn't quite make it to 100 days in a row where we saw declining gas prices. They actually ticked up a bit. And the question is, how much of that energy, the oil price decline, is due to the release from the Strategic Petroleum Reserve? So right now, I think energy is probably the biggest threat to the progress we've made on inflation and the biggest upside risk. I think for housing, which is the other probably the biggest risk, is we're probably looking at that for another 6 to 12 months. But even there, we can see the data starting to roll over. So I think energy is the big thing I'm watching at the moment.
Yeah, Strategic Petroleum Reserve now at levels not seen since 1984. We don't hear a lot about that. Andrew Levin earlier told us he believes inflation will still continue to climb in the months ahead. And even Powell himself admitted that shelter inflation will remain high for, quote, some time. And it was really sticky in that last print. When do you think inflation will begin to subside?
I would say probably around the first quarter of next year. When you look at shelter, that was the real surprise in the last inflation report. And the reason I say that is because everything else came out pretty much as expected, but shelter came in twice what it was. And when you look at the relationship of shelter inflation to housing prices, there's typically about a 15-month lag. So shelter is going to continue to be a major part and a major pressure on inflation, certainly through the rest of this year and probably through the first quarter of next year. The question is going to be, do we get enough of a pullback in everything else? And I think we're certainly going to mitigate inflation. Goods inflation in particular has started to come back as the supply chain has healed. But we're probably going to see increasing, but more slowly increasing inflation, at least through the end of the year.
We do thank you for joining us this afternoon with your insights. Commonwealth Financial Network CIO Brad McMillan, thank you so much.